All right, everybody. Dear God. All right. This is why I continue to say the stock is going to zero. So let me share my screen, a little bit of streamception here while I bring this up. But we're going to look at basically, yeah, I got my Druid class for Diablo for the season. So you're welcome. I'm curious what some of you guys have said for your number one questions, and I've read through a few of them, and all I can do is facepalm. And so let's just go through. Let me zoom in a little bit of streamception. So one or two of these will probably be answered on the call on Monday afternoon after earnings for Palantir. And these sorts of questions are what I think is going to make the stock go to zero. 1.2 thousand people voted this was a thumbs up. Jason H., a retail shareholder, asks, when do you plan to start offering a dividend to long-term shareholders? If you're investing in Palantir for the dividend, I think you got another thing coming. They are able to invest and get return on capital on a very low asset base. And what I mean by that is I don't know what type of assets they truly have on their books. In fact, maybe it's worthwhile me just picking it up, but I'm sure if they were to take $1 and put it back into the company in terms of reinvested capital, the amount of revenue they'd be able to generate and net income they'd be able to generate from that would be a lot more than being able to provide that back to shareholders as dividends. And if you're honestly holding this stock and wanting to get a dividend, I think you need to reevaluate your position at the moment. Am I saying that Palantir will never offer a dividend? It's not what I'm saying. I'm just saying we're a far way along ways from doing something like that. First, before this is even sort of brought to mind, I think what they would need to do is do a share buyback program that offsets share-based compensation. I'm anticipating that that's something that they're going to do, or at least partly try to do in the coming years with the amount of cash that this company is generating. As we get to the $4 or $5 billion a year range, they're probably going to take whatever cash flow from operations they create and offset any share-based compensation. It's very similar to what Google does and many other companies do. So this one, just in its whole, makes me want to facepalm. Shannon A., a retail shareholder, asks, since Palantir is head of the AI industry and large language model and other companies need to catch up with Palantir, what are your plans that are in progress to stay ahead of the competition? That's not too bad of one, you know? And I don't have my shares in Robinhood, so I can't thumbs this one up. You can only really participate in this if you have shares in Robinhood. Joshua J., a retail shareholder, asks, what new clients has Palantir taken on in Q2? What industries are they targeting for Q3 and Q4? That's another good question. I can't complain with that one. That one's actually pretty good. I think these two should be way above the dividend question. And I think this is the same Joshua. Oh, no, that was Jason H. This one's Joshua. What are the biggest challenges the company is facing, and what are your plans to overcome them? It's not a bad one either. Is Palantir rely on NVIDIA's chips and or will they develop their own? Not a bad one either. Does Palantir have plans to eventually buy back shares? That one's, I can understand that one, right? Because Google buys back shares, Apple buys back shares, Amazon buys back some shares. So it is what it is. Where will the company be in a year from now? What's driving Palantir? That's not too bad either. When will Palantir be fully profitable? Well, that's kind of already been answered. They already are. Your software has been proven to be beneficial in Ukraine. Have you received interest from other NATO countries because of this? Not a bad question either. And any plan to team up with other major tech company on AI? That's not too bad. All right, so we've looked at a few of those. I think that that's relatively well and good. Let me go to what my forecasts are for the for this upcoming quarter that is going to be at the end of Monday at 5 p.m. Eastern Time, 4 p.m. Central. So I'm looking forward to that. It's an hour after close. So let's start with the guidance that Palantir provided. So Palantir provided at the end of their 1Q23 earnings, which I think was in the May timeframe. So this was already a month or so into Q2. They provided a revenue guidance of $528 to $532 million, which was a small gain from basically 1Q. I think was like 518 or 520. So very small gain, and it was a 12% gain from year over year. So I think it was 470 or 473 million dollars was the revenue in 2Q of 2022. They have also noted an adjusted income from operations of 118 to 122 million, and that's an adjusted net margin of 22%. This does not take into account share-based compensation. If you remove share-based compensation from this, that's where you get to the true GAAP net income. So I'm anticipating very marginal GAAP net income once again from the organization, probably nowhere more than $20 million or so, which $20 million is the equivalent of an EPS of 1 cent. So there's that aspect of it. Now, let me refresh this again, because for some reason, Twitter is being slow. Or maybe it's just my computer as a whole. There we go. And let me go to my 2Q23 predictions. Now, I just went through over this in Palantir Weekly, and I got a little bit, I guess, scolded from my friends Amit and Arnie. Revenue might be a little bit bullish, but here it goes. So I'm saying about 550 million, which is a 16% year over year increase from 470 something million dollars last year. That's up from 12%, which is what was guided by the friends at Palantir. The reason I'm saying this is because I'm fairly confident that some of the contracts that were included, the U.S. Army contracts and a few of these other contracts with the temporary contract with the NHS and a few of these other ones kind of coming through, have a material position in the bottom line. This is only really a $18 to $20 million increase comparatively, which would mean that the run rate for the year increases slightly, by $70 to $80 million if you were to annualize it in 4-quarter basis. I don't think that that's too far-fetched to believe, and my fingers crossed is that with the uptick that we've already kind of seen in AIP to an extent, it's already kind of making small increases to the revenue. I'm not expecting 10% or 15% increase based off of AIP. I'm just talking about 1 or 2% here or there, and going from a 12 to a 16% year over year. One, I think the company is rather sandbagging 2 to 3%, and then I think just based off of what we're knowing about the products and the rollout so far, and the enthusiasm that everybody is talking about, from Carp to Dan Ives to everybody else, I would not be surprised of another 1 to 2%. So that's where you go from 12% to 16%. U.S. commercial surpasses $125 million a quarter. I think that one will be well received. I think we're at like 100 or so now, and I'm hoping that we can get to like a $1.25 billion trailing 12 month. Maybe not for all of U.S. and maybe not this quarter, but next quarter. So hopefully, that's inclusive of U.S. government and U.S. commercial. I'm hoping cash flow from operations of over $180 million. And that is basically just the actual cash that comes in the cash register. So 550 million, generally we've been able to get about a 30 to 35% cash flow from operations margin or cash flow margin. And so that gets you to about $180 million. And I'm anticipating cash to surpass $3 billion. We're only $100 million away from that. So with the net income plus the cash flow from operations coming in, I think you're in a relatively good space. Keep in mind, this $180 million is really what the company's truly churning out, right? People might be like, oh, net income, GAAP, it's barely, anything. It's like if you remove the $100 million, $120 million a quarter, it's share-based compensation. That's where the true impact is on cash flow from operations. And then, that is what it is, right? Customer count, this one isn't too crazy compared to 1Q to 1Q that we saw in 2022 to 2023. So this is up 43% year over year, 13% quarter over quarter. So it might be a little bit more bullish, and I'm hoping, it's like 1 or 2%. So it's not anything too crazy. So up to 441, which was up from 308 last year. And like I said, that might seem like a big number, but it's not too dissimilar to what we saw from 1Q22 to 1Q23. And then that's up from 391 that we saw in 1Q23. And that's the 13% quarter-over-quarter increase. It's not too unlikely to see anywhere between 12 to 14% quarter-over-quarter growth in customer count. And so that's what I'm kind of pulling for. Commercial customers surpassed 310, up from 280 in 1Q23. And I think that was something like 14% or something like that. So nothing too crazy in terms of commercial customers. Why I say 16% in terms of year-over-year growth, I'm fairly confident that the customer count will mostly come from commercial, and I'm fairly confident it'll mostly come from the United States. I don't really see too many European customers kind of coming through, and I think that that's just based off the fact that, you know, Ukraine is what it is. Any of those big contracts will probably be something that more so happens in 3Q, 4Q later this year. The NHS contract will kind of be later this year. You know, you have some other big catalysts, but I don't think that they've been rolled through yet. Another thing that I thought was a potential catalyst for revenue growth that I talked a little bit about tonight on Palantir Weekly was the fact that it's been about over a year now since Ukraine and Palantir started partnering with respect to their technology usage in the country. And so at what point, and now that the U.S. has provided billions upon billions of dollars in terms of relief, and same with many other companies, or countries rather, you know, when are we going to start seeing a little bit of love, right? Or are we still using it for free, or is Ukraine still using it for free? Which I can understand as well, because it is a testing ground for warfare and active warfare. So that's that. So I just wanted to go through those opportunities really quick and do a quick video on that. And I'm curious what you guys are thinking in terms of your estimates for revenue, customer count, net dollar retention. One thing before I sign off, net dollar retention is something that I think will continue to bite us potentially. So we've continued to see that trend down very heavily, just like the revenue growth year over year. And so that's one thing that I mentioned. Amit asked a very good question, which was, what do you think is going to surprise? What do you think could bite us? I think net dollar retention. Now, I think that there is potential positives. With AIP now being a usage point, now, of course, it's going to take a year or two to roll out. I'm anticipating net dollar retention to kind of curve up because AIP usage will allow non-technical users, like folks in the commercial field, the land field. Well, I guess you guys don't deal in land, but many other people within our organization at UDOC or other organizations that might not necessarily be technical focused or, you know, engineering focused or sciences focused, but they're more on the front office, like commercial side, accounting side. They will have a little bit better usage of things in AIP. So that might increase the amount of usage that overall Palantir gets within an organization, because now you don't necessarily have to be a technical user to be able to get some of the answers that you so want. So anyway, I'm not going to do any price targets or anything like that. I think the company is currently overvalued if you're looking at it on a fiscal year 24, 25, or even 2026 timeframe. But I think it's still cheap if you're looking at it for where the potential might be in 2030 to 2032. So take that as you see fit. I think it's still in its infancy in terms of long-term growth, and I'm anticipating that AIP rollout will go out much better than what we saw with the Apollo rollout. And I'll leave it with that. And I'll hope to see you guys on the next video, and hope you guys continue to enjoy the content. Let me know any thoughts in the comment section below. See you then.